Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the small caps. So yeah, this is look at the top small caps from today. First up is ticker symbol SSLJ, closed up 73% today, very nice move. RSI is now above 50, there at 51, needs to stay above that level. Bullish crossover on ADX. It was a nice close above the middle Bollinger Band at 76 on a nice volume spike. You can see it was the largest volume day since back in July. And so the key now is to stay above 76, turn that level into support. The last close above that level was back here in July. It failed to hold that level and the downtrend continues. So if it dropped below 76, that would signal downside risk. It broke this green line. That's the 50-day simple moving average intraday, but it pulled back. It needs to break above that 99 $1 level in order to head higher. Okay, let's look at RXII. Closed up 28% today. You've got RSI in the bull zone. Want to see Fasto get above 50. Bullish crossover on ADX. This made a nice close as well above the middle Bollinger Band there. Currently at 138. That as long as that level holds, a new uptrend could begin. You could see it was in this downtrending channel. It broke above descending resistance as well, and above the green 50-day simple moving average here, the green line at 151. Now it needs to stay above that level. If it dropped below that level, that would signal consolidation. The upper Bollinger Band here at 168 is the key level to bust through. You can see here it got above the gold line intraday. That's the 100-day simple moving average, but it pulled back. It's going to need to close above that level and turn it into support to head higher. It did have a big volume spike today. You know, that upper wick shows that there was profit taking. Okay, let's look at MOSY here. Closed up over 18%. You know, you have RSI heating up, Fasto's above 20. You had a bullish crossover here on ADX, and this has the same pattern where they ran it up above the 50-day simple moving average and then they drove it down. Once it's above, once the share price gets breaks a key moving average, it needs to stay above. If you're a day trader and it drops below, that's where you lock in gains. You know, that was the same strategy for each of these. One was above the 100. If you locked in at 186, you know, you had reload levels lower. Same here at 99. If you unloaded, you could have loaded lower, and so it gives you a chance to make a trade. Okay, and so this one really gave you a chance to load lower. Now, right now for MOSY, it needs to stay above that middle Bollinger Band. If that level can hold at 76, a new uptrend could begin. It needs to break through the top of this channel, and then it's going to have to get above this 90 upper Bollinger Band to get back up and test that 50-day simple moving average. Once again, for all these stocks that are breaking the middle Bollinger Band on the daily chart, they have to turn that 50-day simple moving average into support to keep that new uptrend going. Okay, let's look at ACHV. All right, so yeah, so this formed a black candle today. Okay, so it did have a big day. It closed up 39%, nearly 40% on the day. It also broke that 100-day simple moving average intraday and pulled back. It needed to stay above that level. Once it pulled back, you know, that was a signal to lock in gains. If you look back here on previous black candles, it has a history of pulling back the next day. I mean, pretty much every single one of these black candles is followed by a red candle. So if history repeats, a red candle is going to form tomorrow. It would be a bullish change in trend if a white candle happened. Odds are, you know, that would be the first time you'd have to go off this chart in many months that a white candle followed a black candle. And so the downside risk here is that the candles work back into the bands. The upper Bollinger Band's down here at 345. So this candle's floating up in space up here. The candles always work into the band, so keep that in mind. Now it could push higher. This could be that 1 out of 10 times that it does head higher after forming the black candle with this pattern. If it does work back in the bands, what you want to see is this 50-day simple moving average hold, the green line. As long as that holds at 306, it should bounce off that and head higher. Now it could come down here to that middle Bollinger Band and fill the gap at 286. If it did drop to that level, it would fill the gap. You just don't want to see it dropping back below that 50-day simple moving average. It's been resistance for quite some time. It really needs to turn into support. Once again, to head higher, it has to turn that 100-day simple moving average into support. It has to break that level. Okay, let's look at DTEA. All right, so nice bounce today, closed up 26%. It's heating up. You have RSI now ready to break above 50, Fasto back above 20. It had that nasty candle. I mean, this was just such a brutal pullback up here. Whoever bought at 530, feel bad for them. You know, it pulled way down here. It had the nice bounce. It looks like Yeah, that looks like a bullish kicking reversal pattern here on the candles. It closed at 3:15 in after hours trading, so that's putting it up here. So it could possibly have a gap up open tomorrow. You know, gap ups, unfilled gaps for a stock like DTEA would not be good. At some point, they would pull back to fill that. What it's going to have to do, it's going to have to break. I mean, it's good for the time being, but you just have to trade it. You know, eventually they're going to come back and fill it. You never know how high they'll run it. Now, to the upside, if it does open at 315, it has to get above the gold line, 326. That'll be the next big level to break. You could see it stalled out at that level last time, and so once it turns that into support, you have the 200-day simple moving average at 350. It stalled out at that level as well. Those are the two big levels. It hasn't been able to break above this 100 and 200-day simple moving average to head higher. Once it gets above 350, that's going to be a bullish change in trend, and that's when you'll know DTEA is very bullish. Right now, today it closed at that 50-day simple moving average at 288. You want to see it stay above that level. If it were to drop back below, that would signal downside risk. Okay, let's look at PTX here. Closed up 12%. RSI is above 30. Fast still up here is heating up. So yeah, this caught my eye because it closed today above the middle Bollinger Band. Barely closed above it. Currently at 92. You know, that's the stop loss level. It has to stay above that level to head higher. It is on a 4-day run. You know, they walked it up to that level. If it were, the risk is if it were to close below, similar to up here where it was trading above the dotted purple line, the 20-day simple moving average, then it closed below, and then the huge downtrend followed. So if it can stay above that level, it could head higher. So keep an eye on it. There was a volume spike today. You know, there was this big one back here on the 10th. So, you know, loading down at the bottom, that's what you want to see. But it has to stay above 92. If it dropped below, that would make it a risk to hold. Okay, take a look at CVM. This is one of our chat plays. Yeah, it closed above resistance today. It's up 9%. And so, yeah, you could see that it was this really nice run when it got above the middle Bollinger Band down here on August the 13th. It got above EMA's 4 and 8 and just kept riding, you know, and it was a nice multi-week swing trade. Well, the charts held up, and right now, you know, it formed this ascending triangle pattern. And so the ascending support and horizontal resistance, it came to a flex point with these last two candles. And a flex point is where a change in trend is going to happen. It's either going to break above resistance or drop below support. And today it broke above resistance. So this closed today above the horizontal resistance line, above high close horizontal resistance, does signal more upside potential. So this is exactly what the bulls wanted to see. Now it's got to break above this 450 resistance zone to head higher. As long as the EMA's 4 and 8 support hold, the signal is to keep riding. Okay, let's look at VLRX here. Okay, yeah, this stock is heating up, closed up 21%. It's been on a nice 3-day run, and it is pushing well above the upper Bollinger Band, so keep that in mind. If this pulls back and it holds that 100-day simple moving average, that could be a nice reload level at 142 if it holds. If that breaks, then look for that 130 level, you know, where the 50-day simple moving average and EMA 4 at. It'd be best if it stayed above the 100-day simple moving average. That would make it interesting. It has to break above high close resistance here in the 165 zone. Then you have the 180 zone, and then you have this open up here at 195. Those are the 3 big levels above that it needs to break to keep pushing higher. Okay, let's look at GBR here. Closed up 25% today. Yeah, this stock had a nice bounce off the middle Bollinger Band, so that's what we were shooting for. And yeah, the candles did work back in the bands, bounced right off that middle Bollinger Band. So congrats to everybody that loaded off of 220 support. You know, nice gains today, up 25%. It was a cool, you know, it's a good technical trade. And so yeah, the strategy was to exit here on the break above the upper Bollinger Band and let it pull back, reload off of support. And now that it's back above the middle Bollinger Band and the 50-day simple moving average at 236, it needs to stay above those levels. The closing price here on the 24th is the key level to break. It needs to break that level to make a retrace back up to 5. So yeah, keep an eye on it. We'll see if it can stay above that you know, 240 support zone and keep riding EMA 4 at 252 support higher. Let's look at YUMA here. Closed up 12%. So yeah, the energy sector stocks, you know, they heated up and then they pulled back and shook a lot of people out of the trade, but as long as the middle Bollinger Band is holding, and definitely if it's still holding the green line, the 50-day simple moving average, it's still in play. Once again, this was the same thing. It got above the upper Bollinger Band. They had a big gap up open, but they really drove it down. And then look where it bounced off, right off that middle Bollinger Band. So anytime you can load off of that middle Bollinger Band and the uptrend, and it holds, the uptrend's intact, and then you've got the good low entry point because the middle Bollinger Band is the bottom of the bullish channel. And so, yeah, so this played out perfectly once again for that 28 load. And then today, the key now is to stay above that 50-day simple moving average at 315. If that level holds, it can push higher. It has to break above the 100-day simple moving average. Once that 41 level turns into support, that's where it could really get moving. Okay, let's look at SNGX. Yeah, and a drop below the middle Bollinger Band for any of these stocks is a sell signal. You have to be very careful with penny stocks. You do not want to be holding long when the daily chart turns bearish. Okay, let's look at SNGX here. Closed up 18% today. Yeah, this chart is heating up. It's been what we call filling the jar. All right, it's filling the jar back to the prior resistance levels. So it's come down, and it's heading back up, and it looks like it's trying to work its way back up to this 240 zone. You can see this was the high close from back in January, and then you have another high close from like March right here, and so basically right now it's super strong on the close. There's no upper wick. The bulls were, the last trade of the day was high of day. That's maximum bullishness. That usually gives you a 100 on Fasto, which it did here. And so basically what it needs to do is stay above the blue line. That's the 300-day simple moving average. That's a stop loss level. If it were to drop below, it could consolidate, test that 200-day simple moving average. If it holds 186, it needs to bust above the 400-day simple moving average at 202. And then you get above that level right about 215. Get above 215, and it could work its way up to 240. It looks like it's working its way back up there. It may not go in a straight line. It is all the way, it is already up 4 days in a row. But, if it holds that 186, it could bounce off and then keep pushing higher. EMA4 is way down at 176, so the candles could work their way back into the bands first, so keep that in mind. Okay, let's look at two more here. ACST closed up 16%. Yeah, this one, it was filling the jar as well. Back up to these prior resistance levels. You can see from back here in January, once again, it has a very similar chart in April. And so this is hitting the 300-day simple moving average. It has to break above 101 and 108. If it could break above those levels, it could possibly run back up to 125 and test that high close from January. Now, to the downside, if it failed to break that $1 resistance zone, it has to stay above the 200-day simple moving average at 82. That's the red line. If that level failed to hold, it could come down here and fill this gap. There's a gap between these two candles. A drop down here near this 100-day simple moving average would fill the gap. Okay, let's look at ALN here. This is the last stock in this video. Closed up 13% today. RXII above 50. Fasto bouncing off of 20. It has two ugly candles in a row. So why am I showing you this chart? Well, okay, so check it out. It's in consumer staples, food products. This is a defensive play. And so, yeah, you never know. They might move this thing. What caught my eye was the volume bars. It had the largest volume since back here in January, and it's hitting the 200-day simple moving average there. If it can break above 19 cents. It could get interesting. It might run up to 24. So keep an eye on it. Right now, it did close above the middle Bollinger Band at 16. The candles are ugly, but it looks like it might get moving with that volume. You never know. It did make a nice run up to 38 back in January. This is kind of stock that you want to lock in those gains when they're on the table, because the volume could get really light when it dries up. Okay, thanks for viewing this video. Really appreciate it. Come check out the chat. Thank you.